Question 1. Which of the following statements best describes the role of the medical necessity criterion in healthcare insurance coverage? A. Medical necessity only applies to emergency services and hospitalization. B. Medical necessity is used to determine if a service is covered under the health plan's policy, ensuring it is appropriate and effective for the patient's condition. C. Medical necessity only applies to preventive care services like vaccines and screenings. D. Medical necessity is irrelevant for mental health treatment, as all mental health services are covered under any health plan. Answer. B. Explanation. In healthcare insurance, medical necessity refers to services that are deemed appropriate and necessary for the diagnosis or treatment of a patient's condition. This criterion helps determine if a service is covered under the policy. Insurance companies use this standard to evaluate whether treatments, procedures, or services are consistent with the diagnosis and the patient's health needs. According to the Affordable Care Act, ACAP, and most insurance policies, coverage is generally denied for services that do not meet this standard, including unnecessary or experimental treatments. Why the others are incorrect? Option is incorrect because medical necessity applies to all types of care, not just emergency services or hospitalization. Option C is incorrect as medical necessity also applies beyond preventive care, such as hospital stays or surgeries, not only routine screenings or vaccinations. Option D is incorrect because medical necessity is also applied to mental health services to ensure that the treatment provided is appropriate for the diagnosis. Question 2. Mr. Thompson is currently enrolled in a health insurance plan through his employer. He recently lost his job and he is concerned about continuing his healthcare coverage. Which of the following options would be his best course of action for maintaining his coverage? He can apply for a new health plan through the state-based marketplace immediately without any eligibility criteria. B. He can enroll in the employer's health plan at a later date since he has a gap in employment. C. He can elect COBRA continuation coverage to maintain his current health insurance plan for up to 18 months. D. He will automatically be enrolled in Medicaid due to his job loss. Answer. C. Explanation. COBRA Consolidated Omnibus Budget Reconciliation Act provides employees and their families with the option to continue their existing employer-sponsored health coverage for a limited period, usually up to 18 months after employment ends. While COBRA allows continued access to the same healthcare plan, the individual will be responsible for paying the full premium, including the portion previously covered by the employer, plus a 2% administrative fee. Why the others are incorrect? Option is incorrect because eligibility for marketplace plans is dependent on specific qualifying events, and while job loss is one such event, immediate enrollment without verification of qualifying event status is not automatic. Option B is incorrect because the employer's plan is not available for re-enrollment after job loss unless the individual is still employed or under specific qualifying conditions. Option D is incorrect as Medicaid is not automatically available to all individuals upon job loss. Eligibility for Medicaid depends on income and other state-specific requirements. Question 3. Scenario: Mr. Daniels was diagnosed with diabetes and recently purchased a health insurance plan that includes a chronic disease management program. After undergoing treatment, he learns that some of his prescriptions are not covered by his plan, even though they are essential for managing his condition. Which of the following should Mr. Daniels do first? That he should appeal to the insurance company based on the grounds that the medication is essential to his health condition. B. He should accept the out-of-pocket costs as they are standard for health insurance. C. He should immediately seek coverage under Medicare as his condition qualifies for it. D. He should contact the Tennessee Department of Commerce and Insurance, TDCI, to file a complaint. Answer A. Explanation. Mr. Daniels should start by appealing to his health insurance company. Most insurance companies have an internal process to challenge decisions regarding coverage, especially if the medication is considered essential for managing a chronic disease like diabetes. His health plan may have exclusions, but he may be able to demonstrate that the medication is medically necessary, which could result in a successful appeal. Insurers are often required to cover necessary treatments for chronic conditions, especially under provisions like those in the ACAP. Why the others are incorrect? Option B is incorrect because patients are not required to accept high out-of-pocket costs when they can potentially appeal the coverage decision. Option C is incorrect because Medicare coverage is not automatically available to individuals under 65 unless they have a qualifying disability or are already enrolled in Medicare due to other circumstances. Option D is incorrect because while contacting the TDCI is an option for filing a complaint, it is typically not the first step. The The first action should be appealing directly to the insurance company under the grievance process. Question 4. Which of the following is a key feature of guaranteed issue in individual health insurance policies? A. It ensures that all applicants are automatically enrolled regardless of their health status. B. It allows insurance companies to deny coverage based on pre-existing conditions. C. It permits insurers to raise premiums based on an individual's health condition. D. It limits the number of individuals who can be covered under a policy in a given year. Answer A. Explanation. The guaranteed issue provision guarantees that health insurers must offer a policy to any applicant, regardless of their health status or pre-existing conditions. This rule is part of the Affordable Care Act account, which prohibits insurers from denying coverage based on medical history. It ensures that all individuals have access to health insurance coverage. Why the others are incorrect? Option B is incorrect because guaranteed issue prohibits insurers from denying coverage based on pre-existing conditions. Option C is incorrect because guaranteed issue restricts insurers from raising premiums based on health conditions. Option D is incorrect as guaranteed issue applies to individuals and does not limit the number of people covered by a policy. Question 5. Which of the following statements about the Health Insurance Portability and Accountability Act (HIPAA) is true? A. HIPAA requires health insurers to disclose medical records to employers for employment-related purposes. B. HIPAA ensures the confidentiality of an individual's health information, including limiting unauthorized disclosures. C. HIPAA only applies to healthcare providers and not to health insurers. D. HIPAA allows insurers to disclose health information to anyone upon request. Answer B. Explanation. HIPAA Health Insurance Portability and Accountability Act ensures the confidentiality and security of an individual's health information. It limits the disclosure of personal health data without the individual's consent, ensuring that health insurers and other covered entities use proper safeguards to protect this information. Why the others are incorrect? Option is incorrect because HIPAA strictly limits disclosure of medical information, including to employers. Option C is incorrect as HIPAA applies to both healthcare providers and health insurers, ensuring that both entities protect patient information. Option D is incorrect as HIPAA does not allow insurers to disclose health information without the individual's consent or authorization, except under specific conditions allowed by law. Question 6. Mr. Johnson is enrolled in a POPN and has recently visited an out-of-network provider. He is wondering why the insurer is only covering part of the cost. What is the most likely reason for the reduced coverage? A. EPO plans provide full coverage for out-of-network services with no restrictions. B. PPO plans typically offer reduced coverage for out-of-network services, requiring the patient to pay a higher out-of-pocket cost. C. PPO plans do not cover any out-of-network services, and Mr. Johnson should pay all the costs himself. D. The insurer mistakenly processed the claim incorrectly and will cover the entire cost once it is corrected. Answer B. Explanation. PPO Preferred Provider Organization plans provide more flexibility than HMO Health Maintenance Organization plans, allowing members to see out-of-network providers. However, PPO plans usually offer reduced coverage for out-of-network services, meaning the insured may have to pay a higher out-of-pocket cost, such as higher coinsurance or deductibles. This is one of the trade-offs for having a wider range of available providers, while the others are incorrect. Option is incorrect because PPO plans typically do not provide full coverage for out-of-network services. Option C is incorrect because PPO plans do cover out-of-network services, just at a reduced rate. Option D is incorrect because it is unlikely the insurer will cover the entire cost, especially if the service was out-of-network, as it's standard practice for PPO plans to require higher cost sharing. Question 7. Which of the following statements best describes utilization management in healthcare insurance? A. It refers to the practice of allowing unlimited access to medical services for all insured individuals. B. It involves reviewing and managing healthcare services to ensure that they are necessary, effective, and cost-efficient. C. It restricts coverage for emergency care, except in cases where the insurance company approves it in advance. D. It involves reducing premiums for individuals who rarely use medical services. Answer B. Explanation. Utilization management refers to the process that insurers use to review and manage healthcare services to ensure that they are medically necessary, effective, and cost-efficient. This can include pre-authorization requirements, case management, and monitoring the appropriateness of medical treatments to control costs while ensuring the patient receives necessary care. Why the others are incorrect. Option is incorrect because utilization management aims to manage and sometimes restrict services to avoid unnecessary treatments. Option C is incorrect as emergency care typically has fewer restrictions and pre-approval is not required for emergency services. Option D is incorrect because utilization management does not directly involve reducing premiums but focuses on managing care. Question 8. Which of the following is a primary difference between Medicaid and Medicare? A. Medicaid is a federal program while Medicare is administered by each state. B. Medicare provides health coverage for low-income individuals while Medicaid is for individuals aged 65 and older. C. Medicaid is a joint federal-state program that helps with healthcare costs for low-income individuals, while Medicare is a federal program primarily for individuals aged 65 and older. D. Medicare only covers prescription drugs, while Medicaid covers all healthcare services. Answer. C. Explanation. Medicaid is a joint federal and state program designed to help with healthcare costs for low-income individuals, including children, pregnant women, elderly individuals, and people with disabilities. Medicare is a federal program that provides health coverage primarily to individuals aged 65 and older, regardless of income, and also provides coverage for individuals under 65 with certain disabilities. Why the others are incorrect. Option is incorrect because Medicaid is administered by individual states while Medicare is a federal program. Option B is incorrect because Medicaid is for low-income individuals, not necessarily those aged 65 and older. Medicare primarily serves people aged 65 and older. Option D is incorrect as Medicare covers more than just prescription drugs. It includes hospital care, medical services, etc., and Medicaid provides broader coverage than Medicare. Question 9. Which of the following health insurance policies typically provides coverage for losses due to an accidental injury? A. Critical illness insurance. B. Accident insurance. C. Disability income insurance. D. Long-term care insurance. Answer. B. Explanation. Accident insurance provides coverage for losses resulting from an accidental injury. It typically pays a lump sum or reimbursement for medical expenses, hospital stays, and other expenses related to the injury. This policy is specifically designed to cover unexpected injuries. Why the others are incorrect. Option is incorrect because critical illness insurance provides benefits for serious illnesses like cancer, heart attack, or stroke, not for accidental injuries. Option C is incorrect because disability income insurance provides benefits to replace lost income when an individual is unable to work due to injury or illness, but not specifically for accident-related injuries. Option D is incorrect because long-term care insurance covers the cost of long-term care services such as nursing home care, but not accidental injuries. Question 10. What is the purpose of the medical loss ratio (MLR) in health insurance? A. To determine the maximum amount that can be charged for premiums. B. To measure the percentage of premiums spent on healthcare services and health quality improvement. C. To calculate the deductible that a policyholder must pay before insurance coverage starts. D. To evaluate the effectiveness of a health insurance policy in terms of customer satisfaction. Answer. B. Explanation. The medical loss ratio (MLR) is a key metric in health insurance that measures the percentage of premiums an insurer spends on healthcare services and health quality improvement. Under the ACAM, insurers are required to spend a certain percentage of premium revenue on actual medical care. If an insurer does not meet the required MLR, they must issue a rebate to policyholders. Why the others are incorrect. Option is incorrect because LR does not set limits on premiums but focuses on the amount spent on healthcare services. Option C is incorrect because MLR does not relate to deductibles but rather the allocation of premiums toward healthcare services. Option D is incorrect as MLR a financial metric, not a customer satisfaction measure. Question 11. Which of the following types of insurance provides coverage for the loss of income due to an illness or injury that prevents an individual from working? A. Health insurance. B. Disability income insurance. C. Life insurance. D. Accident insurance. Answer. B. Explanation. Disability income insurance provides coverage for the loss of income when an individual is unable to work due to illness or injury. This type of insurance typically replaces a portion of the insured person's income, ensuring financial stability while they recover, while the others are incorrect. Option as health insurance covers medical expenses but does not provide income replacement. Option C, life insurance provides a death benefit to beneficiaries but does not replace lost income due to illness or injury. Option D, accident insurance provides coverage for accidental injuries, but it does not typically replace ongoing income if the individual is unable to work. Question 12. Which of the following provisions in a health insurance policy allows the insurer to adjust the policyholder's premiums based on changes in their health status? A. Guaranteed renewable provision. B. Insured's underwriting provision. C. Condition change provision. D. Rating class provision. Answer D. Explanation. The rating class provision allows the insurer to adjust the policyholder's premiums based on changes in their health status. The policyholder's health could affect their rating class, which in turn influences the cost of their premiums, while the others are incorrect. Option is the guarantee renewable provision ensures that the insurer will renew the policy, but it does not allow for premium adjustments based on health. Option B, insured's underwriting provision, typically refers to the initial evaluation of the policyholder's health to determine eligibility and rates, but not to changes over time. Option C, condition change provision, is not standard term in health insurance and doesn't specifically refer to premium changes based on health. Question 13. Which of the following is not a characteristic of a health maintenance organization, HMO? A. Requires members to choose a primary care physician, PCP. B. Offers coverage for both in-network and out-of-network providers. C. Requires referrals for specialist visits. D. Emphasizes preventive care and health maintenance. Answer B. Explanation. HMO plans generally limit members to in-network providers and do not cover out-of-network care except in emergencies. This is a defining feature of HMO plans, which focus on a managed care network of healthcare providers, while the others are incorrect. Option is correct as HMOs require members to choose a primary care physician, PCP. Option C is correct as referrals from the PCP are usually needed to see a specialist in an HMO. Option D is correct as HMOs emphasize preventive care and health maintenance to manage healthcare costs effectively. Question 14. Which of the following is true about catastrophic health insurance? A. It provides comprehensive coverage for all types of healthcare services, including routine care. B. It is designed to provide a safety net for very high medical costs due to severe illness or injury. C. It requires a high monthly premium and low deductible. D. It only covers preventive care and not any treatment for illness. Answer B. Explanation. Catastrophic health insurance is designed to protect against very high medical costs, such as those from a severe illness or injury. It has a high deductible and low monthly premiums, making it an affordable option for individuals who want to protect themselves against extreme health costs, while the others are incorrect. Option is incorrect as catastrophic insurance only covers severe health events, not routine care. Option C is incorrect because catastrophic insurance typically has low premiums but high deductibles. Option D is incorrect as catastrophic insurance covers major health events, not just preventive care. Question 15. Which of the following types of insurance is intended to protect individuals from financial losses resulting from legal claims made against them? A. Professional liability insurance. B. Homeowners insurance. C. General liability insurance. D. Auto insurance. Answer A. Explanation. Professional liability insurance, also known as errors and omissions (EO) insurance, is designed to protect professionals such as doctors, lawyers, or consultants from financial losses resulting from lawsuits or legal claims arising from their professional services, while the others are incorrect. Option B, homeowners insurance, provides protection for personal property and liability at home but is not designed for professional liability. Option C, general liability insurance, provides protection for businesses against claims for injuries or property damage caused by business operations, not professional services. Option D, auto insurance, provides coverage for damages and liability resulting from automobile accidents but not for professional services. Question 16. Which of the following is true about the coordination of benefits rule in health insurance? A. It ensures that the primary insurer always pays the full amount of the claim. B. It determines which insurer is primary and which is secondary when a policyholder is covered by more than one health insurance plan. C. It applies only to individuals who are covered by Medicaid. D. It prevents insurers from paying any claims when A policyholder has multiple health plans. Answer B. Explanation. The coordination of benefits Cobb rule determines which insurer pays first, primary insurer, and which pays second, secondary insurer. When a policyholder is covered by multiple health insurance plans, the secondary insurer may cover some of the remaining costs that the primary insurer does not pay. Why the others are incorrect. Option is incorrect because the primary insurer may not always pay the full amount of the claim. Option C is incorrect as coordination of benefits applies to all types of health insurance coverage, not just Medicaid. Option D is incorrect as the rule ensures that claims are paid, but it coordinates the amount between multiple insurers. Question 17. Which of the following is not considered a risk management technique in insurance? A. Risk avoidance. B. Risk retention. C. Risk transfer. D. Risk elimination. Answer D. Explanation. Risk elimination is not typically considered a risk management technique in insurance. Risk management involves methods such as risk avoidance, eliminating activities that pose a risk, risk retention, accepting the risk and bearing the loss, and risk transfer, transferring the risk to another party through insurance. Why the others are incorrect. Option called risk avoidance is a valid risk management technique that involves avoiding certain activities to prevent risk. Option B, risk retention, is a technique where the individual or business accepts the risk and bears the financial burden if a loss occurs. Option C, risk transfer, is a technique where the risk is transferred to another party, such as through purchasing insurance. Question 18. Which of the following statements about term life insurance is true? It provides lifelong coverage as long as premiums are paid. B. It builds cash value over time, which can be borrowed against. C. It is typically more affordable than whole life insurance. D. It requires medical exams for all applicants regardless of age. Answer C. Explanation. Term life insurance is typically more affordable than whole life insurance because it provides coverage for a set period, such as 10, 20, or 30 years, without any cash value accumulation. Premiums are lower because it does not offer lifelong coverage or an investment component. Why the others are incorrect. Option is incorrect as term life insurance only provides coverage for a specific term, not for life. Option B is incorrect because term life insurance does not build cash value. Only whole life insurance offers this feature. Option D is incorrect because medical exams are generally required for higher amounts of coverage, but not always for all applicants, especially at lower levels. Question 19. Which of the following best describes umbrella insurance? A. It provides additional coverage over and above the limits of existing policies like homeowners or auto insurance. B. It is a basic form of health insurance that covers routine doctor visits. C. It is designed to provide benefits for permanent disabilities resulting from accidents. D. It is a short-term life insurance policy with a very low death benefit. Answer A. Explanation. Umbrella insurance provides extra liability coverage beyond the limits of other policies like homeowners, auto, or boat insurance. It helps protect against large claims or lawsuits that exceed the standard policy limits. Why the others are incorrect. Option B is incorrect as umbrella insurance is not a form of health insurance. Option C is incorrect because umbrella insurance provides additional liability coverage, not disability coverage. Option D is incorrect because umbrella insurance is not life insurance and does not provide death benefits. Question 20. Which of the following is an example of an exclusion in a standard homeowner's insurance policy? A. Damage caused by fire. B. Theft of personal property. C. Damage caused by an earthquake. D. Damage to a neighbor's property. Answer C. Explanation. Standard homeowners insurance policies typically exclude coverage for damage caused by earthquakes. Separate earthquake insurance can be purchased to cover this type of damage. Why the others are incorrect. Option is incorrect because fire damage is typically covered under a standard homeowner's insurance policy. Option B is incorrect because theft of personal property is also generally covered under homeowner's insurance. Option D is incorrect because damage to a neighbor's property is typically covered under liability protection within homeowner's policy. Question 21. Which of the following types of life insurance policies allows the policyholder to adjust the death benefit and premium payments? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Answer B. Explanation. Universal life insurance is a flexible form of permanent life insurance that allows the policyholder to adjust the death benefit and premiums within certain limits. The policyholder can also accumulate cash value that can be used to pay premiums, while the others are incorrect. Option was whole life insurance provides a fixed death benefit and premium payments without the flexibility to adjust them. Option C, term life insurance, is a temporary form of life insurance that does not accumulate cash value or allow flexibility in premiums. Option D, variable life insurance, allows investment in separate accounts, but its death benefit is not adjustable in the same way as universal life insurance. Question 22. Which of the following is not typically covered under a basic homeowner's insurance policy? A, fire damage to the dwelling. B, liability for injuries to guests on the property. C, loss of personal belongings due to theft. D, damage from a flood. Answer D, explanation. Damage caused by floods is typically not covered under a standard homeowner's insurance policy. Flood insurance is a separate policy that must be purchased through the National Flood Insurance Program, NFIP, or private insurers. Why the others are incorrect? Option is incorrect, as fire damage is usually covered under a standard homeowner's policy. Option B is incorrect because liability coverage for injuries to guests is generally included in a basic homeowner's policy. Option C is incorrect because theft of personal belongings is typically covered under homeowners insurance. Question 23. Which of the following best describes permanent life insurance? A life insurance policy that provides coverage for a specified term. B, a policy that provides coverage for the policyholder's lifetime and includes cash value component. C, policy that offers high death benefits but no cash value. D, policy that pays out only in the event of an accident. Answer B, explanation. Permanent life insurance provides lifetime coverage as long as premiums are paid, and it includes a cash value component that grows over time. Examples include whole life and universal life insurance. While the others are incorrect, option is incorrect because it describes term life insurance, which is temporary and does not have a cash value component. Option C is incorrect because permanent life insurance includes both death benefits and a cash value component. Option D is incorrect because it describes accidental death and dismemberment AD insurance, not permanent life insurance. Question 24. Which of the following terms refers to the process of determining the value of a property for insurance purposes? A, underwriting. B, appraisal. C, indemnity. D, risk assessment. Answer B, explanation. An appraisal is the process of determining the value of property for insurance purposes. It involves a professional assessment of the property's worth, which helps set the correct amount of coverage. Why the others are incorrect? Option underwriting refers to the process of evaluating the risk of insuring an individual or entity. Option C, indemnity, refers to the principle that insurance will restore the insured to the same financial position they were in before the loss. Option D, risk assessment, is the process of evaluating the likelihood of risk occurring but does not specifically refer to the valuation of property. Question 25. Which of the following is an example of moral hazard in insurance? A, an individual driving a car while intoxicated. B, a house burning down due to faulty wiring. C, a person who has health insurance failing to maintain a healthy lifestyle. D, a company purchasing flood insurance after a storm has damaged their property. Answer C, explanation. Moral hazard refers to the idea that individuals may take on more risk because they have insurance coverage. In this case, a person with health insurance may be less motivated to maintain a healthy lifestyle, knowing they have coverage to help with the cost of medical care. Why the others are incorrect? Option where driving while intoxicated is an example of physical or moral risk, but not directly related to insurance coverage incentivizing reckless behavior. Option B, faulty wiring, is a technical hazard, not a moral hazard. Option D, purchasing flood insurance after damage, is an example of adverse selection, not moral hazard. Question 26. Which of the following best describes the indemnity principle in insurance? A, the insurer must pay an amount equal to the original cost of the item insured. B, the insurer must pay the policyholder an amount sufficient to restore the policyholder to their original financial position after a loss. C, the insurer must provide the full value of the policy to the beneficiaries upon the policyholder's death. D, the insurer must compensate for loss without regard to the cost of replacement. Answer B, explanation. The The indemnity principle in insurance means that the insured should be restored to the same financial position after a loss, but not profit from the loss. This principle ensures that the policyholder is compensated for their financial loss without receiving more than the actual loss. Why the others are incorrect. Option is incorrect because indemnity is about restoring the financial position, not just the original cost. Option C is incorrect because this describes life insurance, not indemnity insurance. Option D is incorrect because indemnity ensures the value of the loss is covered, not necessarily the full replacement cost. Question 27. Which of the following types of insurance is required by law for all drivers in most states? A. Comprehensive auto insurance. B. Liability auto insurance. C. Collision auto insurance. D. Uninsured motorist insurance. Answer. B. Explanation. Liability auto insurance is required by law in most states. It covers damage and injuries to others if the policyholder is at fault in an accident. This ensures that the driver can cover the costs of damage to other people and property. Why the others are incorrect. Option is as comprehensive auto insurance is optional and covers damage to your vehicle from non-collision events such as theft or natural disasters. Option C. Collision auto insurance is optional and covers damage to your vehicle from a collision regardless of fault. Option D. Uninsured motorist insurance is optional in some states but not required in most places. Question 28. Which of the following best describes deductible in an insurance policy? A. The maximum amount the insurer will pay for a claim. B. The amount a policyholder must pay out of pocket before the insurer begins to pay for a claim. C. The amount a policyholder receives for a claim. D. The percentage of the loss the insurer is responsible for paying. Answer. B. Explanation. A deductible is the amount a policyholder must pay out of pocket before the insurance company starts covering the remaining costs of a claim. For example, if a policyholder has a $500 deductible and incurs a $2,000 claim, they would pay the first $500 and the insurer would cover the remaining $1,500. Why the others are incorrect. Option A describes the policy's coverage limit, not the deductible. Option C describes the claim payment, not the deductible. Option D refers to coinsurance or the percentage of the claim the insurer covers, which is different from deductible. Question 29. What is the purpose of underwriting in the insurance industry? A. To determine the value of the insured property. B. To assess the risk and decide the terms and premium for an insurance policy. C. To approve the payment of claims. D. To manage the insurance company's investments. Answer. B. Explanation. Underwriting is the process of evaluating the risks associated with an applicant for insurance and determining the appropriate premium, coverage terms, and eligibility. Underwriters assess factors such as the applicant's health, lifestyle, and property conditions. Why the others are incorrect. Option determining value refers to appraisals, not underwriting. Option C, approving claims, is part of claims management, not underwriting. Option D, managing investments, is part of an insurer's investment strategy, not underwriting. Question 30. Which of the following is true about a rider in an insurance policy? A. It is an additional policy purchased separately from the main policy. B. It is a modification to the insurance policy that provides additional coverage or benefits. C. It is a clause that excludes certain risks from being covered. D. It is a part of the claims process in which the insurer negotiates a settlement with the insured. Answer. B. Explanation. A rider is an attachment to an insurance policy that adds coverage or modifies the terms of the policy. Riders can enhance or extend coverage for specific needs, such as adding accidental death coverage to a life insurance policy. Why the others are incorrect. Option is incorrect because a rider is attached to an existing policy, not purchased separately. Option C is incorrect because an exclusion clause limits coverage, whereas a rider adds or modifies coverage. Option D is incorrect because the claims process does not directly involve the creation of a rider.